Hello, everyone. I'm going to go ahead and show you today how much will you need to retire. And I'm using this software here called RightCapital. You can access it for free below. In the description, I have a link down there. And you'll be able to run your own scenario and figure out how close you are to retirement, how your plan will do. And at the end, it'll give you a percentage here that it will say how likely you are to succeed with your current plan. And then we can make changes or adjustments, or maybe test out some numbers to see how much you will need to make your plan work in the future. So I went through and created a sample, which you will do yourself if you use the link. And I've created John and Sarah here, right? They're 56 and 55, and they want to retire at 62 together, 62 and 61. And I've created kind of some dummy accounts here. They have 600,000 in 401k, $100,000 in brokerage, 100,000 in Roth. Okay. And their goals: retiring at 62, 61. They want 6,000 a month retirement. Their healthcare costs and their hypothetical long-term care costs are already included based on the template that RightCapital uses. So I would just keep that in there. And then their vacation goal, I've added in something here. Once they retire every 2 years, they want $5,000 to go on vacation, and it will end after 20 years. Okay, so you can put in your own goals and do some customizations there for your plan, but I'm going to keep it pretty simple here. I'm going to skip income. Actually, we'll talk about John's making 40, Sarah's making 80. Their Social Security is going to be estimated off the simple estimate here based on just their salaries. And we're going to run with that. If you have your Social Security info, you can plug that in there too. And John's getting a pension, $20,000 a year. Great. Savings, expenses, we're going to ignore. If you wanted to add those in, you could and make it a little more robust, but I'm going to keep it simple right now. So we're going to run over the retirement tab and see our results. So current plan is them at 50%, okay? And you'll get a number. 80 plus is good. 70, you could probably get away with. 60s or lower, I would be concerned with, or know that this plan might not be reasonable. But it might happen. 60% of the time it works, right? We still have what, 7 years here till retirement. So there's some wiggle room there. You will get this area down here, these action items, and you'll be able to change things and see, okay, how can we adjust things to make it work? The only thing I recommend everyone change is this retirement spending smile. It starts with inflation adjusted. That's the base. Switch it over to retirement spending smile. This is based on surveys, research that's been done that retirees actually spend less as time goes on, adjusting for inflation. So what does that mean? So if you have $6,000 a month in expenses and inflation was 3%, retirees typically do not increase their expenses by 3%, right? To keep up with inflation. It's typically inflation less 1%. So their adjusted increase would actually be only 2%. So that's what this is. Okay, so that's what I believe is pretty realistic for most retirees. So they're up at 61%. I would consider this their baseline here. And we can look at, obviously, we can change retirement date. We can change here retirement date. We can change some. Maybe we reduce the vacation to $4,000 and we reduce their spending a bit, right? And we can see how that works out. They're at 71 now. Maybe we go an extra year, or there's all these different options you can play around with. I'm going to reset everything in retirement spending smile, and then we can go adjust to figure out how much you will need. Okay, so based on John and Sarah, they're disappointed here because it's not going to work out. But let's say you could also look down here. I don't have it in right now. Okay, let's go up to profile. Let's start adjusting some numbers and seeing how we do. So let's say they have 800,000. Okay, figure out that goal. So what if they had 800,000? So if they had 200,000 more right now, how would they be? They'd be at 75. That's probably acceptable, right? Okay, so if they had 800,000, they'd be good. How would they be doing if they had 1,000,000, right? You can start playing around with this. Here, if they had 1,000,000, how would they be doing? Probably much better. 84% chance. Okay, great. So then you can kind of target those numbers in your head. Okay, I need to save. I need to get this much more in the 7 years they have left. Another couple cool things I want to show you is the confidence interval. So it's going to start like this, and it's going to show you these ranges. I would get rid of the 5 to 95% because those are more obscure, unlikely scenarios. We want these two showing here. What this is showing, make sure this today's dollars is turned on, or it looks a bit confusing dollars wise. This program is running 1,000 scenarios based on your inputs and how it thinks you will do in retirement. This is this is the middle 50% chance. So the most likely 50% chance occurrences, this is how your retirement balances will move throughout retirement, right? The median here is obviously the most likely, I guess you could say, or the 500th interval, right? The middle 500th scenario. And then on either side, we have 250 different scenarios that are probably most likely. So this is most likely what will happen in retirement, right? Give or take. Some things based on investment returns, interest, market fluctuations, things like that. And so you can kind of see how you're doing, and basically a successful scenario will be like this, where you'll basically in whenever you retire, your retirement account will basically be flat your whole life, and then it'll dip due to long-term care costs. That's from all the different scenarios I've seen. That's likely what will happen, right? And so you can take a look at this. Your confidence, obviously, if it was ending early, right? If you saw this blue line hitting down here, which was the case when we had it, which I can show you what it'll look like when we did. Let's go back to the original scenario. Excuse me. All right, I'll show you what kind of an unsuccessful one looks like. Okay, see how it's ending here early? That's not good. That means you're running out of money when you're in the nursing home, long-term care facility. That's not good. Okay, so we want to make sure that we don't hit that in this interval. So at least 75% of the intervals were successful. Okay, and then we can take a look. Another thing that you might be interested in is stress testing. You can see how your plan does with all these different risks. So if a market drops immediately, your plan went from 61% to 50% chance. So that's not good for Sarah and John, right? And I'm probably going to come out with another video in the future on how to address all these different risks. So you can kind of adjust them so you feel more safe across the board. But here you go. So inflation's one of their bigger risks, Social Security, market drop immediately, and you can play around with these things based on what you think they are. I'm just going to use the templated numbers here because I think that's reasonable to see. So taxes doesn't really affect us very much, and longevity doesn't seem to affect us very much either, or this John and Sarah scenario. So there you go. So that's a couple things I wanted to show you right there. Use the link below, get started. You can comment and I can help you out. If you're in the state of Michigan, I'm a financial advisor. I can help you out personally with investments. Otherwise, I cannot help you with any investment or security questions, but I can help you obviously using the software or with the planning questions. And that's it for now. So take care, like and subscribe.